And this is how we start to build a portfolio trade. We don't put a lot of contracts on. Remember, when you're just starting out, you want to put on 1 or 2 contracts, maybe 3 contracts at the most. You want to give yourself an opportunity not to get hurt too bad. If you're just starting out, you have to learn how to manage these trades as you go. And the only way to do that without panicking is to do small contracts. Now, once you get to the point where you really know what you're doing, you can go ahead and put in, 3, 4, 5, 10 contracts at a time. But the easiest way to get started is to do these low contracts. That's why we don't show you other positions in which we have 10, 20, 30, 40, 50 contracts at a time on. So, we're just waiting here for this position to get filled. We put it in at 1405, which was just about a minute or so ago. We haven't gotten filled yet, but we should be getting hit pretty soon here because the market is moving around our midpoint, our limit here, and we're above the mid. Now we're at the mid. It does move around a little bit. We can also take a quick look at the charts to see what's happening with the overall market. Like I said, if you take a look at using the TOS platform, I like to set this up on the TOS charts because I've got the Qs minus the QIDs, which is a pair trade, and they tend to trend much better than the actual prices themselves. And it's almost like a tell. If you play poker, you know what a tell is. A tell is kind of like a determination of when the market is giving you a head fake and when it's not giving you a head fake, and which direction it's actually going into. If we take a look at the daily charts on this pair trade, you can see that we've been trending down since October, the middle of October last year, the beginning of November, and we've been trading down, but we've hit a potential bottom in the market here. These because it's a pair trade, it tends to trend truer than the actual price charts themselves, and that's why I like to use this. Let's see. Let's take a look and see what the IWM is doing right now. Just kind of hanging around. Let's take a look at our trade. We should be good. I guess if we really want to hit this, if we really want to get this thing filled, we may have to go up to 245 here. Let's see what they do for us. Let's go up to 244. Yeah, it's been about 5 minutes. If we go up to 244, we should get hit very quickly. Yep, we got filled. So, I mean, you just have to kind of, take a look at your positions once in a while and just kind of manage those. Now we're going to delete those. We're going to take a look at our real positions. And there we are. Now we are in the trade. We're in a good spot, I think. We're not too bad. We want to keep an eye on this. We're starting out with a small loss, as all double calendars do, because you're not going to make money on the very first day. This is a trade that improves over time. We have good theta, and our deltas are pretty neutral. Our vega's okay, but we're in a good shape. We're in a good position here. Let's set our slices again to break even. And you can see we're still down around 64.5, 65, and 73 on the upside, which is exactly where we set our resistance and support points, because we've been in a trading range here. So all we have to do now is, now that we're in the trade, we're going to continue to monitor it, on a pretty much a daily basis. We want to take a look at it every single day, but we want to also take a look at it every day, just in case we need to do, in case the Russell really starts to move around here. We want to take a look at our individual trades and adjust if necessary. And so now we're in the trade. All we have to do is manage it. We're in a really good position here. I like the shape of this tent. It doesn't sag too far. Got nice wide break evens. And as days by day goes by, this white line is going to continue to move up and up and up and up, just like it does. And I will show you how it does move up over time to create a very profitable position for us. This is a trade that I am currently in that I haven't closed out yet for the April and May expirations, which is just a few days away. You can see when this trade first came on, our white line, which was our current profit and loss graph, was down, way down below the zero line here, and now it's moved up so that we have close to $158, $160 in profit, and we're still in very, very good shape here. Our tent is not sagging; it's up quite high, and the only reason I'm staying in this position was I got in kind of late. I actually had to adjust this position a little bit, but I think we're still in very, very good shape here. And this will continue to be profitable. We've only got 4 days left on it, so I'm kind of hoping that we can extract maybe 100, because we've got $418 maximum profit at expiration. We've got $150 so dollars currently. I think we can bring that up to around $300 in profit over the next couple of days if the market doesn't move too much. But even if it does move either way, we can still generate quite a bit of profit here. So that's what eventually our position in the IWM is going to look like. That white line is going to continue to increase as long as we don't have to adjust it. And then we're in good shape. Now, if we do have to adjust it, what happens is normally when you're adjusting a position, you're going to lose a little bit of profit, but you're going to remain profitable. So in other words, your maximum profit may decrease if we do have to adjust the position, but you will remain profitable in the position because of the adjustments that we're making. That's a very important point. You want to adjust your positions to remain profitable. However, your maximum profit may decline over time. But we start out with very small positions, 1 or 2 contracts at the most, and that's how we want to manage the position. Now, over time, this will increase in value, and that's our exact goal. Now we are building a portfolio. We put a position on. This is for the May expiration. We're writing the May options. We're buying the June quarterlies. You can see our positions are here. And that's how we're building a portfolio. Now we're going to we're going to take a look at the EEM position. I keep typing 3 E's in there. We're going to be building a position very shortly in the diamonds. So we're going to have several positions in several different indexes because they really do act differently at different times. The diamonds are the Dow Jones Industrial 30 stocks ETF. The EEM is the Emerging Market ETF. Why, I love those 3 M's, I guess, 3 E's. And also we have the Russell 2000, which is a much broader index of 2,000 stocks. So that is how we set up that, and as always, trade with confidence.